This is not over, my friends. This is not over when it comes to FIG. In fact, this is just the beginning. In today's video, I'm going to be telling you at what levels I'm going to be picking up approximately $50,000 worth of FIG and much more. So with that said, hit the thumbs up button because not only is it going to be an informative video, it is also going to be an educational one. And now let's get breaking down. So when it comes to FIG, guys, this is a ticker which is going to absolutely parabolic. I mean, this is like, you know, it debuted at 30 bucks a share and it ripped all the way upwards of about 150, right? But where is this ticker heading from here now? Right now, this is an IPO stock. Now, here's the thing about IPO stocks and what personally, I don't like to trade them. And I'll tell you guys exactly why I don't like trading IPO stocks too much. Because at the end of the day, this is what you need to understand, right? You know, there is no such thing as intrinsic value in the markets, okay? There is no such thing as intrinsic value. Intrinsic value is not a thing. What does intrinsic value refer to? Intrinsic value refers to what is a stock actually worth. All that you see on your screen, right, is just what people are willing to pay for something. And what people are willing to pay for something is oftentimes expensive or cheap in comparison to its previous historic price action. So for example, let's say that a given stock like Nvidia, okay? Or let's use Nvidia as an example. We'll go on the daily. So as you guys can see, I bought a shit ton of Nvidia down here, okay? Now, Nvidia was trading at 150, okay? Then it came all the way down to $100 levels. Okay, $100 levels, as you guys can see, right? Now, here's the thing. This is what you need to understand. Is that $100 was only cheap because it had been trading at 150 before that. So we have historical numbers that we can pay attention to when it comes to anticipating where a given ticker is headed. When it comes to FIG, on the other hand, there's no such thing. It just popped off. Look, I mean, look at this daily candles. 2 of them. Right? So we don't really know what the markets are willing to pay for this stock. Well, now we do. 148. It seems like this $150 level is the top, right? Which is going to be the $half resistance, which is why it stopped. As you guys know, when a ticker breaks above all its levels of resistance and it's going up, right? The next thing that we should pay attention to in order to anticipate where it's going to pause and where it's going to stop or slow down is going to be your whole dollar levels and your half dollar levels. So for example, let's say a given ticker is its highest point it's ever gone is $8. Now it breaks 8. Well, we can anticipate that around the $10 mark, the whole dollar level, it's going to start slowing down. And that's going to be its new level of resistance. Even though historically speaking, it has never really, you know, explored that area that high up of a price action. Okay, that's it. And what is this? What is this level really like? Is this a real thing? No, it's just a psychological level, right? It's a psychological level, and the reality is that a psychological level is just as strong as any other level, because at the end of the day, right? And I think that this is something that is also very important for me to explain to you guys. At the end of the day, stocks go up because people are pressing buy. Stocks go down because people are pressing sell. They go up because people are pressing buy, they go down because people are pressing sell. It's that simple. Now, who cares if they're pressing sell because of their psychology and their emotions, or they're pressing sell because they actually are they're looking at the chart. That was crazy. They're doing the charts and they're looking at the levels and everything like that. Who cares? It doesn't matter to us. Irrelevant. Irrelevant. Absolutely irrelevant. Okay? So, when it comes to FIG, for me, I think it's only getting started. I believe that it can bounce off the $100 levels. Now, right now, the markets are also in a downtrend. Okay, right now the market, the downtrend is it's an overstatement if you ask me. Okay, I think it's overdoing it. But I do think that right now the markets are in a position where they are dipping. The markets are dipping right now, and when the markets dip, risk tolerance also dips. A debut from a company that is already up freaking 500%, more less 400% from the levels that it actually debuted in the markets, 300% from the levels that it's debuted in the markets. Supposedly it was supposed to debut at 33 bucks per share. There's going to be a lot of selling going on. So for me, 122 is not the level where I would buy. I would be a buyer closer to 100. I would play 100 to 111, 110. That's what I would play for 10% gains, 15% gains. Now, is that short-sighted? Yes, absolutely. That's why I'm only doing that with a portion of my position when it comes to FIG. The rest, I'm going to be holding for 125 to 150 again. Okay? But with a big portion of it, I'm going to enter at 100, sell some at 110, sell some at 123, then hold the rest for 150 and onwards. Okay? Remember, this is a very, very risky play. We don't know where the bottom is. As much as we know the bottom's freaking $33. Now, I doubt it's going to break below this $100 level, okay? Or at least the 85 cent. The 85 level, I doubt so. But it's going to be really interesting. Now, options are also going to be, of course, introduced when it comes to FIG sooner than later. And that's gonna get the people going. That's gonna lead to a lot of excitement, and that's gonna lead to a lot of buying. So for me, this is far from over when it comes to FIG, and I'm actually bullish at around closer to $100 levels. Right now, listen, if you guys want to trade alongside me every single day, receive day trailers, swing alerts, and everything like that, check out our Discord. Right now, the next 10 members that join the Discord get access to it for a 50% discount. We already have over 400 members coming back month after month after month. We day trade stocks, we swing trade stocks, we option trade, you name it, we got it. Give it a shot. I promise you, you will not regret it. There's a reason why 400 people are coming back month after month. It's because they're making money. Okay, that's it. It's really that simple. It's not rocket science, guys. It's typical. Hey, we give you the entries, we give you the exits. Look at this. My man brought in $35,000 off of our metal calls a few days ago. Amazing, amazing, killer stuff, guys. Killer instant, killer stuff when it comes to Top Trader Academy. Anyways, I appreciate you guys. I look forward to meeting you guys in Top Trader Academy. You know what I would do? I would never suggest you guys do something that I wouldn't do. Personally, what I would do is I would join for the first 7 days, see if I make money. If I make money, I'll come back for more. If I don't make money, I'll leave. That's what I would do. Okay? It's that simple. Anyways, I appreciate you guys. Thank you for watching. Your boy Sam from Top Academy.